makers and market movers. This is The Pulse with Francine Lacqua.
Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London. Now, some optimism in the markets this morning on a Bloomberg scoop that members of President-elect Donald Trump's economic team have discussed a gradual approach to ramping up tariffs. Now, we'll discuss all of that and the market implications with Lucy Baldwin, Global Head of Research at Citi, in a moment. But first, let's get the latest from Washington, plus another Bloomberg scoop. Chinese officials are considering the option of Elon Musk acquiring the U.S. operations of TikTok if the company is forced to sell. Let's bring in our EMEA News Director, Ross Matheson, and Bloomberg's Executive Editor for Technology, Peter Elstrom. So thank you both for joining us. It's a regular occurrence to try and figure out what's happening in tech and what's happening in Washington. Ross, we had this Bloomberg scoop about the Trump tariffs. I'm surprised at the market reaction. I don't know what they like, the fact that it's gradual, and so it's a bit more, it's less blunt than the kind of I come in and I do tariffs. So does it assume that Donald Trump and his team will then, try and weigh the impact the tariffs have?
I mean, the most striking thing is really this is a proposal that some of the people in his team seem to be cooking up. You can see the hand of the Treasury Secretary nominee Besant in this. And really what it suggests is that there could be cooler heads prevailing around Trump in general on this issue. Let's not go out too hard on tariffs. I mean, really the impact on inflation, whether you go bit by bit, is it that gradual, really? So it's interesting to see the market reaction, maybe less on the inflation side, but really the idea, again, that you will maybe have that group of people around Donald Trump who will be urging him to go carefully on this. And so you start with something on tariffs. Maybe it's not massive. You start with something. You see the reaction. Does that prompt any kind of behavioural change? The warning, you could do more if needed, but you kind of stop at any point doing something blockbuster and then having to try and unwind that. So it does suggest some pragmatism, perhaps, in the way that tariffs might be approached. Again, it all depends on whether they can sell this to Donald Trump, what he wants to do. Again, this seems to be a proposal they'll put to him, but maybe the pragmatism part of it is really what is filtering through to the market reaction today.
Yeah, and apart from economic policy, I think we'll spend a good amount of time trying to figure out the relationship between Elon Musk and Donald Trump. But there's this Bloomberg scoop today saying TikTok, if they get banned from the U.S., are also thinking of maybe being sold to Elon Musk. I mean, what do we know?
Yeah, that's exactly right. What we understand from our sources is that senior government officials in Beijing are talking about a variety of options if TikTok is actually banned in the United States. We're only days away from this congressional ban going into effect. That would be January 19th. The Supreme Court had some emergency hearings to hear whether they would stay that ban. They haven't issued a formal decision yet, but it does look like they're probably going to go ahead with the ban at this point. So we understand that they've talked through in Beijing a number of different options. One of the options that's kind of appealing to them is that perhaps they would allow ByteDance, the parent company of TikTok, to sell the TikTok U.S. operations, just the U.S. operations, to Elon Musk, perhaps combine it with X to be able to run the operations together.
I mean, is that problematic, the fact that he's so close to the president and would have such a, big thing under him?
Well, I think from the perspective of Beijing, it's probably not problematic. It's probably an asset. As Roz was just describing, the Chinese government, the U.S. government are going to negotiate many different things, including tariffs, export controls, and a whole bunch of other things. And it may make some sense for Beijing to be able to cut some sort of deal with a Trump ally, as close of an ally as Elon Musk is, and work out some sort of deal where TikTok ends up in hands that are considered closely allied with the president.
So, Ross, we've also had a final report from former special counsel Jack Smith, and he basically talks about, the fact that Trump illegally conspired to overturn the 2020 elections. What did we actually learn?
Well, it's interesting because most of what was in the report is things that we already knew. I mean, it's basically the claim that Donald Trump leaned very heavily on his then deputy Mike Pence to avoid congressional ratification of the election result and really tried to prevent people from even talking to Mike Pence. So the nuts and bolts of the report really aren't that new. Obviously, the conclusion, that Trump may have been liable for prosecution and conviction if it had gone that way without sort of immunity would have been a factor. And it came out, obviously, in the middle of the night because they were clearly trying to get this report out before any further action from Camp Trump to try and stop it. Does it change anything? I mean, if you believe what you believe about January 6th, you kind of still believe it. It's not going to change perspectives of Americans about how they feel about this event and this day and what happened, and Donald Trump in particular. Can he use it as leverage again with his base? Possibly. Does it change things given it's kind of backward looking now in nature? No. But it's interesting to see that they did manage to get it out just in the days before Donald Trump actually takes office.
Roz, there's also been murmurs and talk about 30 hostages still being held in Gaza by Hamas being released as part of a ceasefire deal. I know, again, there are questions on whether it's thanks to Trump or thanks to Biden, but they both seem pretty optimistic that a deal can be done.
Well, that's right. Things do seem to be building towards some kind of at least framework, understanding. They obviously want something they can shake hands on, for want of a better word, before Donald Trump takes office, and that would allow Joe Biden, in a way, to claim, look what I managed to do right before I was out the door. So there's a strong vested interest here from both Joe Biden and Donald Trump to get something done. The question is, what does that then mean for the actual region that it's about? Is it fragile? Is it lasting? Does it change the dynamic in the Middle East? Probably not. Is it going to be lasting? There'd be big questions around that. But at least, it does give a pathway forward. The question is, what changed Israel's mind here? Did the US give something or promise something to Israel to get Benjamin Netanyahu to agree to whatever this framework might be?
Peter, very quickly, even if Elon Musk doesn't end up buying TikTok, does it change, if TikTok gets banned in the U.S., does it change everything for social media platforms?
Well, it certainly changes the dynamics within the country. TikTok has been such a popular platform. What we're seeing, actually, is the rise of some alternative Chinese apps, actually, though. There's one in particular, Xiaohongshu, XHS, which has become very popular within the U.S. It's an alternative. It allows you to do many of the same things as TikTok does. It's also under Chinese ownership. So the U.S. government officials may find that if they ban TikTok in the U.S., if they push people off of this platform, they may move to another platform that's also owned by a Chinese company in the background with the same kind of risks that you're seeing with TikTok right now. So that those dynamics need to be tracked pretty closely.
And we haven't even started talking about Mark Zuckerberg. So much to decipher. Thank you both for joining us, Peter Elstrom and Roz Matheson. Now, coming up, we'll discuss the market impact of the latest Trump tariff news with Citi's Lucy Baldwin. Plus, also the French Prime Minister is set to present his policy agenda to Parliament. Details ahead, and this is Bloomberg. Well, welcome back, everyone. With me now, Lucy Baldwin, Global Head of Research at Citi. Lucy, so good to speak to you. I mean, there's a lot to unpack because the markets really move on any kind of news about even this Bloomberg scoop, Donald Trump maybe phasing in his tariffs. I don't know what you're expecting or whether it's just kind of like blow by blow. We'll have to see what President Trump has to say.
Well, you're absolutely right. Q1 is going to have a huge amount of policy uncertainty, not least with tariffs. And, of course, tariffs in many ways is, Francine, the big wild card, isn't it? Yeah. And when we've thought about tariffs and the sort of potential for the impact that it could have on the earnings of the S&P 500 this year, very broadly, if we went down the path of a broad tariff around 10%, we think that's about a 6% kind of earnings impact, which is quite significant, of course. But I think in reality, we're going to have to see how this all goes. And when we add up all the different policy impacts that you might see coming in over the course of the next few months, we think probably in reality, in aggregate, we're talking about a couple of percentage points either way to our expectation for earnings growth, which in aggregate for the S&P this year is about 13%. So, yes, of course, certain stocks, certain sectors, it's going to be more material. But probably once we get through this uncertainty, that's the sort of order and magnitude we'd be expecting to see.
I mean, the Fed is a lot more cautious, certainly when it comes down to curbing inflation. They've been cautious for a while, but the markets are really only latching on now. Is that, again, because of the tariffs effect being inflationary?
I think you're absolutely right. Wherever you look in the world, there's this debate at the moment as to whether the concerns that we're seeing in bond markets is driven around, is this a better economy? Is this a much stronger jobs market that we're seeing? Or is this actually all back to electoral politics and policy and what that feeds through into markets. And I think, in truth, it's going to be an element of the two, right, that are starting to feed into everybody's psyches, whether it's CEO of companies, whether it's policymakers at central banks.
But how much should we worry about the health of the labour market? Again, that changes dynamics. We've seen, the 40-year in Japan, the highest it's been since in like more than 20 years. We've seen huge moves in the UK. I mean, all of this, the catalyst was the US.
Yeah, absolutely. That's definitely the epicenter of this, right? But as you say, there's so much government debt everywhere. The origins of lots of these things come back to different government plans. So like in the UK, obviously, things do come back a little bit to that budget that we saw. But you're right, that the crux of it all always goes back to how good is the labour market and is anything going to jeopardise that, right? And I think in the US, the labour market still looks incredibly strong. We had that amazing jobs print, and I think that's meant for a lot of people that they think there's absolutely no chance that you're going to see, therefore, any movement in the Fed following that in terms of cutting. And even our economist, who is naturally much more nervous about the labour market and is convinced that we will start to see it unravel this year, he's actually had to also say, look, I'm going to push this back, right? So he's now not expecting to see the Fed move until May. So I think that is definitely the debate that is unravelling everywhere, is where can you see those cracks emerging? I think here in the UK, you are starting to see more cracks in the labour market. I think there is more concern around the cost of labour, and you're seeing those intentions around what's going to happen to hiring, etc., really start to soften. So I think for everybody, watching the health of the labour market wherever they're invested is going to be really critical this year.
Lucy, through all of your research, is it volatility, the word of 2025?
It does feel like that, doesn't it? If like 24 was all about risk on in every sense, right? This year definitely feels as though, because of the starting point, we're really, really attuned to any risk, right? And I think there are so many potential risks now that are forming around the globe. Our big message to clients is the sort of only free lunch, I guess, in investing, as they say, is diversification. So it's diversification across asset classes and within asset classes. And I think what we've been saying, certainly, towards the back end of last year around the big US equity market moves that we'd seen was, look, you've got to be really cautious here that is going to be very difficult to keep repeating. And ultimately, yes, it has worked for the last couple of years now, being heavily invested in the Mag 7. But as we come into 25, given how many risks there are, you've really got to think about that diversification strategy.
Yeah, let's also talk about France now. The leader of the left-wing socialists say his party may be near an agreement with the government, raising the chances that Prime Minister François Bayrou will be able to pass a budget. Now, Bayrou is due to present his policy agenda to Parliament this afternoon, so let's go live to Paris and Bloomberg's Caroline Conan. Caroline, great to speak to you. So what are we actually expecting from the speech this afternoon?
We expect him to talk about immigration, about the budget that he's planning to present by mid-February. But now, and that may surprise you, Francine, the most important thing we're expecting him to talk about is the pension reform. This pension reform was adopted back in 2023 after months of protest, raising the retirement age of the French from 62 to 64. Now, you wonder why this is coming back on the table. That's because the socialists have made this a key point in order to support or not support a vote of no confidence against the new Prime Minister, François Bayrou. We heard from the head of the Socialist Party, Olivier Faure, fueling optimism on the bond market this morning, saying we might just be a few hours away from some sort of agreement with this government, a sort of pact of non-aggression from the socialists against this new Prime Minister, François Bayrou, which of course is very important because of this uncertainty, this instability we've seen since the snap elections back in July. Remember, his predecessor, Michel Barnier, only lasted for 3 months. So we'll watch very carefully what exactly François Bayrou says about this pension reform, whether he actually pronounces the word suspension. His entourage is saying that perhaps he's looking for a different word, some kind of new financing instead of just suspending this pension reform. But that will, of course, be key to see how long François Bayrou can survive.
Caroline, thank you so much. Caroline Conant in Paris. I mean, Lucy, when you look at Europe, we have, so France, many question marks. You have, of course, the German election, February 23rd. What do you do with Europe right now? They seem to be in a favorable position in terms of interest rates compared to the UK, but actually growth is looking pretty dire.
Yeah, look, I think what you have with Europe is some hope, though, Francine, right? And I think the way we've tried to talk to clients about investing in European equities, for example, is very much on that basis, right? So we've said, look, we're at the end of probably late cycle in terms of markets, right, in terms of valuation set up globally. So you want this barbell approach. So yes, US equities might be cool for everybody, but guess what? There's European equities that offer this cyclical diversification strategy. And I think there is a lot of quality in Europe, and I do think now's a good time to have a look. Obviously, last year we saw Europe underperform the US by its biggest margin in a really, really long time. So I think that could set Europe up very nicely. And of course, there's a number of catalysts in Europe, not just sort of political reform, where I think there is tremendous possibility, potentially to almost go down a US type of path in terms of deregulation and some other things that could come through. But I think if we had that alongside maybe some resolution to some of the major conflicts in the world, maybe some movement, therefore, in terms of energy pricing and the strategy around that and how we're going to fund the transition, to the comments just made around pension reform, things that might encourage some innovation back in Europe alongside that deregulation. I think those could be really, really positive. And, of course, China, which is a massive wild card for global markets all in. And I think if we do start to see that more material stimulus come through, which you would expect to see at some stage, once we get through the inauguration, then I think that could be another set of catalysts for Europe that could start to see the market perform better.
Okay, so interesting. So not a lost cause. We'll get back to that in a second. Lucy Baldwin from Citi stays with us. This is Bloomberg. Welcome back, everyone. Now, our big Bloomberg scoop is the fact that Trump's incoming economic team may be considering a gradual ramp up in trade tariffs. Now, that would mean that possibly cooler heads prevail, but also it could avert some kind of inflation spike. We're back with Lucy Baldwin, Global Head of Research at Citi. Lucy, I mean, the one thing that matters is what happens to the dollar, but also probably more importantly is what happens to U.S. equities this year.
Yeah. Well, look, I think when we consider the S&P 500 for 2025, our view, Francine, is despite these very elevated valuation levels, we do still see, as we push through the year, about 10% upside from here. We've got a 6,500 target in. However, what I would say is we've got a bull case, which is 6,900, and a bear case, which is 5,100, which is giving you a sense of that asymmetric reward that we're seeing, right, and the risk to the downside. So, we are telling people to sort of hedge, protect some of these positions that they've got. But I think when you look at the S&P 500 for the year, the big debate with clients is going to be, can the Mag 7 keep performing? Can they deliver this beat and raise again this year like they did through 2024? And what about the other 493 names?
Yeah, but that seems actually a little bit, I guess, more resilient to the tariffs. Is that fair?
Yeah, look, I think that the tariff piece in reality is going to be a small impact in aggregate to those earnings. Yeah. But I do think from a sentiment perspective, it's going to be really, really critical. And for certain sectors, right, I think the news that we get in the early part of this year, for example, this week we're coming into financials earnings season. Financials has been an overweight for us and many others. But in reality, a lot of it's been on euphoria around potential regulatory reset. So I think there's a number of big tests for the market as we go forward, hence the mantra that diversification is going to be key.
Lucy, as always, thank you so much for joining us. Lucy Baldwin, they're Global Head of Research at Citi. Now, coming up, U.S. companies increasingly turning away from their diversity, equity, and inclusion practices. We discuss that next with Miranda Brawn, the Miranda Brawn Diversity Leadership Foundation, of course, CEO. This is Bloomberg. Good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London, and these are your top stories. Now, Donald Trump's team is said to be discussing slowly ramping up tariffs to avoid an inflation spike. Stocks gain, the dollar weakens on Bloomberg story. Chinese officials weigh having Elon Musk acquire TikTok's U.S. operations if the app is banned. Plus, the Chancellor, Rachel Reeves, will address Parliament for the first time since the UK was rocked by market turbulence. Now, Southern California faces another round of dangerous fire weather, even as crews struggle to contain wind-driven blazes that have paralyzed Los Angeles for nearly a week and killed at least 24 people. The disaster is expected to be among the costliest in U.S. history, with estimated damages and losses between $250 billion and $275 billion. Now, for more, let's bring Bloomberg's Joe Wirtz. Joe, thank you so much for joining us. So what more do we actually know about the likely damages from the winds and fires?
Yeah, the damages are going to be extensive. I mean, it's worth noting that the fires are still burning. A couple of the big ones basically out of control, so the crews have not been able to come in and fully do an estimate, but we're talking thousands and thousands of buildings. Like you said, billions of dollars in damages. We're looking at, one of the most destructive, most damaging disasters in California history, at least, dating back to the 94 Northridge earthquake. So these will continue to mount, and also looking at a ton of damage to infrastructure and things like that.
I mean, I know a lot of the pictures on social media are definitely apocalyptic. What have officials been saying about the recovery and actually the rebuilding story? Yeah,
look, this recovery is going to take years, just in the losses alone and figuring out exactly what was damaged and who's going to pay for it. Governor Newsom and the federal officials in the U.S. are clearing out, billions of dollars to try to get this going as quickly as possible. But they are still actively fighting these fires and really haven't been able to get in and do a full damage assessment. And today we've got another really dry, windy day out in Southern California. A lot of real potential recipe for those fires to keep going, to spread even more. So the destruction, the damage, big, enormous, and likely to keep climbing.
All right, thank you so much, Joe Wirtz, of course, for the update. We'll continue bringing you up to the hour minutes, of course, on the story. Now, the EU is considering expanding its investigation into whether X broke content moderation rules. Elon Musk's social media company is accused of failing to tackle illegal content and disinformation. Now, the Commission's top digital official told Bloomberg they're looking at whether a live-streamed conversation between Musk and Germany's far-right leader gave a political candidate an unfair advantage.
With X, the investigation has been already going on 1 year. And it's quite broad, the scope that Commission is investigating. And now we are currently assessing that if the scope is large enough, also when it comes to these upcoming German elections, we are covering already all the risks on that.
Well, we'll also be speaking to the EU's Climate Commissioner, Wopke Hoekstra, the High Representative for Foreign Affairs, Kaja Kallas. Catch those interviews here on Bloomberg TV tomorrow. And the SEC is extending its crackdown on Wall Street's use of text and other messaging apps for business that is supposed to be monitored and archived by employers. Now, affiliates of Blackstone, KKR, Apollo, and Charles Schwab are among a dozen firms that will collectively pay more than $63 million for failing to track employees' use of unauthorized communications platforms. Well, the case comes just before President-elect Donald Trump's administration takes charge. Meta and Amazon have become the latest U.S. companies to scale back their diversity and inclusion efforts. Now, they've joined corporates across the country, including Walmart and McDonald's, in a retreat from DEI policies. Now, it's not yet clear what this means for companies in Europe, whether the gender pay gap is widening for non-executive board members in financial services. Now, we're now joined by Miranda Brawn, founder of the Brawn Review into Boardroom Sustainability, Inclusion, and Corporate Governance. Miranda, thank you so much for joining us. We're 6 days away from the Trump inauguration. You've done immense efforts to try and explain and also highlight some of the things that corporate America has been doing to try and make a difference. Is there going to be a crackdown on some of these policies? Or are we going to see a reversal or a stagnation?
There's definitely a crackdown. I think we've already seen with Meta on Friday, who have announced that they're actually drawing and they're cutting back on their diversity, equity and inclusion programs. We've also got Amazon. We've got so many other US large corporations who have cut back. But I think on the positive side of things, we do have Apple, who have recently announced that they're very secure with their compliance structure. And they do believe that when it comes to diversity and inclusion, it's a must-have for the business arena. But it is concerning, and I think lots of organisations, they are fearful. There is anxiety And so I think that's what we're seeing. And I think when we look at the legal and political arena, these are some of the reasons why these large organisations are saying that they want to cut back on diversity programmes. But I think we've also got to look at some of the solutions and some of the things that are legal when it does come down to the new Trump term. And some of the things that organisations can still do that will still be legal will be coaching and mentoring programmes. There will be the structured interview process. There's also making sure that the interview process is also biased. So there are lots of things that organisations can be doing. But I think at the forefront, and this is what we've been researching at the Brawn Review, is making sure that organisations are sustainable and inclusive. What I've noticed, though, having conversations with various global leaders through the Brawn Review, through lots of research that we've done, is that at the start of 2020, when we launched the UK's first black women on boards, there were lots of calls. There were lots of CEOs and board directors asking for recommendations. Sadly, over the last few years, that has slowed down. So I think we might see a trend of people maybe fearful of the new administration coming in. And when we look at the Trump's appointed judges, I think that's also going to affect the law, the actual legal cases taking place, putting my lawyer's hat on.
Miranda, do you think, I mean, is it because they're afraid of retaliation?
They are.
From the Trump camp or actually from the followers or Donald Trump?
Well,
or would they still be quietly doing it?
Well, one of the advice would be to quietly do it. You can have control within your own walls. So for any large corporation that might be fearful of the backlash from Trump's administration, and when you look at this is from the public perspective, but from private companies, this does not affect that. So any of the, for example, when you look at the US Supreme Court 2023 for students of fair administration, or when you look at the US Court of Appeal, they actually rejected the ruling for NASDAQ when they said that listed companies, they need to have at least one woman, one person of colour, or an LGBTQ plus person. They actually rejected that. But organisations can still, within their own remit, push forward when it comes to diversity and inclusion. I think that's so important. But on a positive side, I think within the UK, we're still pushing forward. So many of my guests who are board directors on the Dare podcast, they are still very much positive. They're still moving forward. They've got the Apple mindset. But I think it's going to be very interesting with the Trump administration to see what is the backlash. And also, when it comes to diversity and inclusion research, there's so much research that's been out there that shows that it makes an organisation more innovative and more profitable. Yeah. So all of those organisations that are, like Meta, that are pulling back, you've got WhatsApp, you've got Facebook, you've got Instagram. What are their global users going to be doing? Are they actually going to be choosing someone that's more in line with their values, especially from a diverse global user base? So I think the next 6 to 12 months is going to be very interesting. And what other organisations are going to be joining? For example, what's Netflix going to be doing? What's Google going to be doing? This might also impact the technology industry.
Miranda, what's the Apple mindset?
Well, the Apple mindset is literally what they're saying is, and it's my mindset, they're saying as far as they're concerned, when it comes to diversity and inclusion programmes, this is actually beneficial. This is actually something that brings profits to the table. So they're very, very confident that as far as they're concerned, when it comes to the other organisations that are scared about the legal or the political risks, Apple is saying, well, as far as we're concerned, we've done our checks and balances, and we're very confident that we've got a very secure very confident with their compliance programme.
And when you look at Europe, I mean, there's shifting politics, right?
Yes.
Everywhere in Europe. So it's here in the UK with reform getting much more, the right wing also in Germany doing quite well. I don't know whether this goes back to actually wokeism and whether there needs to be a rebrand, that there's a confusion between some of the DEI initiatives and woke, which means different things to different people.
Definitely. And I think there is this thing of I'm not pro-woke, I'm not anti-woke. And what is woke? I mean, it goes all the way back to the civil rights. And what is woke? It's about pushing for meaningful change. It's about having values. But I think maybe there is a need to rebrand this woke term. But when it comes back to diversity and inclusion, I think one of the things that I'm doing in the global boardroom is actually having conversations with CEOs, having conversations with board chairs and advising them and letting them know that it's whatever hostile environment is taking place externally, what they can do internally is actually let's regroup. Let's have a look at what's working from a diversity front, because I think lots of people are saying, well, we've been pushing all this diversity programme, the agenda, and it's not working, but it's what exactly have you been doing? So I think it's really important to go back to the purpose. Why are you doing this? What is the commitment? What is the vision? And maybe we tweak that. But I think additionally, it all comes down to culture. We've spent so many years getting diversity within the organisations, getting it in the boardroom. We don't want to waste this hard work. So I think it's so important to have global leaders actually use their voice. The voice is the most powerful platform. And I think what global leaders can be doing is not only making sure that their organisations are fully inclusive, which is what the Brawn review is all about, but also making sure that they use their voice to speak up about diversity, equity and inclusion programmes.
What about the UK government? They've been in charge for about 6 months.
Yes.
Are they doing enough, or are they shying away?
Well, I've got connections with the UK government, and I think there's always more that we can be doing, but I think they're very much focused on the healthcare, diversity within the healthcare. There's a lot more that we can all be doing, but I think they're definitely on track for the right direction for diversity and inclusion. But I think when you look at the UK and Europe and other continents around the world, I think all eyes are on the US at the moment in terms of what is going to happen once Trump does come in for his second term. But I think when we look at diversity and inclusion for the last year or two, since I started the Brawn review at Oxford University, where I was their visiting fellow, we have noticed that there is a drawback. I mean, I've mentioned that the calls have dropped in terms of global leaders, chairs, CEOs asking for recommendations to hire diverse candidates. But I think we've also got to remember that when it comes to diversity, equity and inclusion programmes and initiatives, this does make financial sense. So short term, medium term, it will be interesting to see the organisations that do shy away from diversity and are cutting back versus the one who are brave and have the courage to continue with that commitment. What are the profit levels going to look like? What are the innovation numbers going to look like? And also from a consumer perspective, what are the consumers going to be doing? Is there going to be a backlash?
We'll see. So many questions. Thank you so much, Miranda, for joining us today. Miranda Brawn, the founder of the Brawn Review. Now, coming up, we'll be joined by Nigel Wilson, the former chief executive of Legal & General, now chair of the Canary Wharf Group, for his take on the UK sell-off. We'll talk economy, we'll talk inflation, we'll talk gilts. This is Bloomberg.
We do not have a weak pound. In fact, if you look at the trade-weighted value of the pound, I think it's actually risen over the past 15 months and has been pretty stable since the Labour government came into power.
That's Jim O'Neill, the former chair of Goldman Sachs Asset Management, pushing back against claims of a weak pound. Now, for more on the UK outlook, we're joined by Nigel Wilson, former chief executive of Legal & General, now chair of Canary Wharf Group. But Nigel, as always, thank you so much for joining us. Look, for me, it's undeniable that the UK somehow became the epicenter of a sell-off because there are question marks about growth, inflation. Is it the Chancellor's fault?
No, it's not the Chancellor's fault. I think there's... The budget was a bit of a surprise and was seen very negatively by business, particularly the increase in NIC, which is a £25 billion hit to the business sector, and obviously confidence erodes as a consequence of that. And I think the main reason is we're still tracking America. You know, American rates have moved, our rates have moved in parallel. We're competing for that capital right now. But we are 50 points ahead of what the OBR forecasts, brackets, and you could take that as a proxy for the Treasury. You know, rates are about 50 basis points higher at 5-year and 10-year than was put in the plan, and so we're not way out from where the OBR numbers were and the Treasury numbers were, but we're at the outer edge of that, and the economy is not growing as fast as we thought it was going to grow, and we're not seeing investment pull through in the way that we thought it would pull through. So,
Nigel, again, what's the right thing for the Chancellor to do now to get ahead of it, if she can?
Well, I think she has to go back to the growth agenda. That was the one that people were expecting. Instead, we had quite an ideological budget in education, in health, and in many other areas when we needed a growth budget, and business was looking for that. The Citi was looking for that. You know, we're not over-leveraged in the UK. The GDP, debt to GDP ratio is still under 100. You know, with the only Germany has a better ratio than we do. So we have a lower stock than everybody else, but the flow into the gilts market is unprecedented. We've got 300 billion of gilts which have to be sold this year and indeed next year. That's 10% of GDP, which is the highest in the G7. Our investment to GDP is the lowest in the G7. So it's very unlikely if you've got the lowest investment, you're going to have the top of the GDP and G7 in terms of growth, and that's clearly not where we're heading at the moment.
But, John, I mean, there's market concern now. So does the Chancellor wait until spring and do something extra on growth or even cutting spending, or she needs to come out? Would that not sow panic if she came out and said,
she's definitely got to come out. I mean, you've got to respond to what's in front of you now and actually talk about the growth agenda. And I would be very surprised if she doesn't do that in the next 3 to 4 weeks and clarify some issues which were raised in and around the budget. And, you know, I'm sure the Treasury is working on that right now, is that we have to have a sense of where we're going to really grow the economy and not wait until, you know, March, April, May, June, which is the current timetable.
But that's what investment, extra investment, that requires more debt.
I think they've got to stop the narrative. It's all about the government investing in the economy and it's the National Wealth Fund and it is all this other stuff. You know, the government's not great at running the big projects. HS2 is probably one of the worst projects we've ever had in the last 100 years in Britain. So we need other big companies stepping up and saying they're going to invest more in growth in the UK. And we need the planning reforms and the pension reforms to actually happen. And actually we're seeing minor changes at the moment in planning, but it's still a system that's incredibly slow, particularly compared to America. And we have judicial review after judicial review of all of our big projects in the UK, and they just take too long. In the low interest rates, that costs this amount. In high interest rates, it costs this amount. And so we've got to recognise that actually these delays are really costing us money and turning people away from investing in the UK.
But, Nigel, is that, I mean, again, the problem is always one of timeline, is that even if you announce this, it takes, you know, the market is worried about things that are more immediate. Yeah,
they're worried, but they're not overly stressed. This is not like the LDI crisis, the trust Kwarteng crisis that we experienced before. This is that we're at the outer edge of what we thought was realistic, and, you know, the pound's a bit weaker against the dollar than we thought. The rates are higher than we thought. Growth is lower than we thought. So she's got to be acting very positively and engage with business on this. I mean, the NAC took us all by surprise, and we don't want to see a repeat of, you know, additional taxes and more government spending and actually not enough business investment. That investment to GDP ratio is really low. We need about an extra £100 billion of new investment, incremental investment in the UK to get anywhere near the growth targets that Labour set itself.
Nigel, thank you so much. Nigel Wilson, of course, stays with us. We'll have plenty more on the UK. This is Bloomberg. Welcome back, everyone. Still with us, Nigel Wilson, former chief executive of Legal & General, now chair of Canary Wharf Group. Nigel, thank you so much for sticking with us. We were talking a little bit about the dynamics of UK growth and assets and what the Chancellor could do. We're also 6 days away from Donald Trump getting into the White House. Does that complicate things?
No, I think it's going to help things, because what Trump has been brilliant at is he uses credible threats and comes back down from them to a more sensible solution. We give credible promises and actually can't deliver them, and therefore one creates unhappiness and the other one's going to create a bit more happiness. And I think that'll be good for the UK, because I expect gilt rates to fall and treasuries to fall when we see Trump come into office and implement some of the tariff plans and some of the Greenland, Canada and Panama Canal takeovers and immigration, and we get a more realistic and pragmatic solution to those issues, and that'll have a positive effect on the UK.
What does that mean for, you were saying, you know, the prism of communication with the UK government and the US is completely different. Does that matter to investors?
I think it does matter to investors, because, you know, and again, I think that matters with Europe as well, is that we've neglected communication and building relations across the world, I think, for the last 10 years. And Keir has actually done a good job of actually rebuilding some of those relationships in the last few months. We have to work much harder at all of this relationship management than we have done in the past. there's a huge opportunity for the UK. We've still got that 6 trillion of long-term capital, which is the highest ratio in the world to actually invest, and too much of it's in cash and gilts and other things, as we know. We have to invest in growth equity to deliver growth companies, to deliver overall growth for the economy.
But this would be part of the capital markets reform. I mean, is that enough? Because, again, you look at the I guess pensioners will have to take on more risk, which doesn't come naturally.
If you look at risk on a one-year basis, but actually you're taking risk over a 10 or 20-year basis, actually when you look at taking risk over 10 or 20 years, these are the right things to do. These are low-risk, better return options for both at an individual level, but actually at the country level. And we've got to be bold. We've got to actually stop tinkering and making all these tiny little changes to taxes and everything that irritate everybody, and actually focus on how we're going to deliver growth, how we're going to get growth capital, including from America. America is a great sponsor of growth capital here in the UK.
Is there anything that the Chancellor needs to just get rid of that was just in the budget 3 months ago? I
would have got rid of several things that were in the budget a few years ago. I think there's lots of things that she's committed to do, and I don't think she can roll back from those. But actually, making planning reform happen, getting rid of making pension reform happen, and actually getting the confidence of both the very big companies in the UK, but also the growth companies in the UK. And that got eroded during the budget process and the communications thereafter.
Nigel, thank you so much. Nigel Wilson, there, former chief executive of Legal & General, now chair of Canary Wharf Group. Now, you can also find out how the UK bond market could impact personal finance at a live Q&A on Bloomberg.com. That's today, 12 p.m. London time. Up next, Bloomberg Brief, Danny Berger and Manus Cranny in New York, and this is Bloomberg.